Hi there, welcome to kneppyinvests and welcome to another technical update video. We've had a busy day today. It's already midday, yet I took the dogs for a 3-hour walk. Yes, 18 kilometers. Hurt my back during the walk somehow. And then I came home, prepared to record this video, and then I realized I accidentally deleted my "Is it time to buy CBA" video. So I had to record that video again. That sort of bums me out. So eventually it gets to the point where I'm recording this video. Typically I record this technical update video at around about 9 to 10 a.m. on a Sunday. So a little bit later today. So who knows how this video will go. Okay, so interesting day in the markets during the week. So last week we were quite bullish, but we ended the week with a bit of a bear tinge to the story, and the XJO right here shows 2 negative days to end the week. But funny enough, if you have a look at the weekly chart, you actually do see a fairly bearish 1-week candlestick. So even though slightly up for the week, 0.15%, we did and were above 8,000 for a period during the week. In fact, I was listening to the AusBiz The Core, one of their episodes during the week, and they were giving each other high fives, congratulations, hugs, that the XJO got above 8,000. And I think one of the analysts said, or the expert said, I think we're going to remain 8,000 forever, or something ridiculous like that. And then, of course, what happened straight after that? We fell below 8,000. So a sort of negative 1-week candlestick, which sort of makes sense because if you look at the range, the trading range, very close to the top of that range. And whenever you see a 1 week with the candlestick like this, with a nice shadow above the main body, you will tend to find a little bit of weakness. Not always, but if we go back through time, particularly back in 2022, we saw quite a few weeks near the top of the trading range with that shadow above the main body, and then we saw the index pull back. Not an absolute, but that does sort of make sense. We're near the top of the range. We might see a little bit of weakness in the market moving forward. So don't expect the XEO to go on a massive tear from here. It's still within the trading range that has been in place for 15 years. Obey the trading range. It's only been above once, and it was for like above it for maybe 1 day back in August 2021, if I remember. And it was only below the trading range during the COVID-19 financial panic, when everyone was selling the shares. They didn't care about the trading range at all. So respect the trading range, and respect it when we get to near the top of the trading range. Expect a bit of weakness. When we get near the bottom of the trading range, expect a little bit of upside. That's the way you play this sort of chart. So that's the XJO. What about the XSO? Bit of weakness there as well? Actually, the XSO is down for the week. That's a bit of a surprise, down 1%. So a little bit of weakness in small caps, which is surprising, particularly when you talk about and compare to the American markets. The Russell 2000, I'm assuming, was up for the week. We'll get to that in a second, but not quite as, I suppose, interesting as the XGO, the XSO, because again, the record highs for the XSO were way back in 2007. So we're near record highs in the XGO, well off record highs for the XSO. It just tells you that the past 15 years, or maybe even longer than that, have not been as fruitful for small caps as the larger caps in Australia are. Fairly similar than what we've seen in America, but not quite as extreme. I think it's been tough to be a small cap investor, but when times are good for small caps, I think it could go on a massive run, sort of like what we saw back in the mid-early 2000s. Beautiful chart from 2003 all the way through to 2007. The XSO went from 1,700 to 4,100, so more than doubled in a few years. And again, nowhere near those highs just yet. Okay, so that's all I want to talk about when it comes to the Australian markets. I don't expect a massive bull run from here, just because we're at the top of the trading range for the XJO, and it's just natural to see a little bit of weakness moving in. Okay, so let's move on to the American markets. We'll start off with the Nasdaq, and then we'll have a look at the Dow Jones and then the Russell 2000. Nasdaq had a really bad week. wasn't it? Down 3.98%. Ooh, my portfolio felt that. Well, not my super fund felt that, because I do have a lot of American companies in my super fund, particularly those tech companies, and those tech companies saw their share price fall a little bit. My non-super funds actually had a pretty good week. Anyway, I think, yeah, mostly up. But yeah, so but when you look at this chart, it's an uptrend, a long-term uptrend. So this is the weekly chart, by the way. A long-term uptrend. It just COVID-19 is just a blip here, just a blip. Long-term uptrend, but these sort of negative weeks happen frequently. The last time it happened was in April, so not that long ago, 3 months ago. In fact, in April, that a week when the Nasdaq was down 5.4%, and I can almost guarantee you, a lot of people were panicking then, just like maybe they're panicking now. We have also had down weeks as much as, well, yeah, 7.5% in January 2022. That's understandable because that was when interest rates were starting to rise, and yeah, naturally enough, people were panicking. Even during COVID-19, we had drops of 10.4% and 12.5%. So a little bit higher than what we see now, but I wouldn't be absolutely panicking. Now, in saying that, it's a really negative 1 week candlestick. So it's a whole body. It's a red body, which means the Nasdaq opened near the high of the week and closed near the low or at the low of the week. So those are negative or bearish 1 week candlesticks, or one period candlesticks is probably the way to say it. But respect the uptrend, and Nasdaq is still in a beautiful uptrend. Can we say the same thing for the Dow Jones? I actually expect the Dow Jones to be up for the week because there was rotation from the tech companies, the Magnificent Seven, into small caps and other non-tech companies. So let's have a look at the Dow Jones Industrial. Was it up? Oh, this is just like the XJO. So you can see that I actually haven't had a look at these before now. So it was up 0.72%, but very similar to the XJO. This is actually fairly bearish 1 week or 1 period candlestick, because we do see a fairly large shadow above the main body, which tells us there's a lot of selling in the latter part of the week or during the week. But it did break out to new highs during the week. And there was a little bit of resistance right at 40,000, and it's broken above 40,000. So if I looked at this, I wouldn't necessarily be negative about the Dow Jones Industrial. Yeah, it wouldn't. This is pretty good. It's better than the XJO. It's better than the XSO. Maybe not quite as good as the Nasdaq, but that's understandable. Now onto the Russell 2000. I reckon the Russell 2000 was up 3% for the week. Let's have a look. 1.7%. So there was a selling again. So the Russell 2000 was down. Let's have a look at the daily chart for the Russell 2000. Yeah, actually, let's go to the Dow Jones. So 2 negative days in a row. So this could be just a buy the dip situation. So you do get a little bit of a different perspective when you look at a different time period. So when I look at the daily for the Dow Jones compared to the weekly, I think this is just because the Dow Jones went on a really good run, and this is just a natural, a little bit of profit taking. When you look at the Russell 2000 daily chart, yeah, this is probably the same. And don't forget, the Russell 2000 made history during the week in terms of it rose 10% in a fairly short period of time, and there was some historical reason why that was unusual. And when you do see that sort of thing happening, that sort of rally, you're always going to see a bit of profit taking. So that's maybe what has happened with the Russell 2000. The last 3 trading days of the week, we have seen a bit of profit taking, but the chart looks much better than the XSO. Even the weekly chart looks a little bit better because there has been a breakout with the Russell 2000. And if you go through the history, unlike the XSO, the Russell 2000 highs were not that long ago, 2021. In fact, 2007, it got to a high about 850. Now it's 2,184. So small caps in the United States have done much better than the small cap Australian companies. That's what I get when I compare the Russell 2000 to the XSO. I'd much rather be in small caps in America than small caps here. However, I love small caps in Australia, and I've been investing in that space for a long time. And I think it all depends on which type of companies you invest in. If you invest in profitable small cap companies, you're more likely to do much better, because a lot of those small caps are non-profitable, loss-making, and they never be profitable. Okay, so that's the American markets. Let's have a look at the Nikkei. And Nikkei had a negative week, down 2.7%. But still, it's in an uptrend. One negative week does not make a trend, does not make a trend. And I'm just going to have a look at the DAX. And what's the other one? The FTSE. I'm assuming DAX is down. Yep, DAX is down 3%. The FTSE is down a little bit. It's going sideways the last couple of months, going sideways. And the Hang Seng down or flat. Okay, so that's really all the indices I want to talk about. A sort of down week mostly. I'm trying to think which indices was up. It was just the Dow Jones, was that up slightly? Yeah, Dow Jones was up slightly. Russell 2000 was up slightly as well. Most other indices down for the week. Okay, let's have a look at commodities. I'm just going to go back to my video technical watch list. Let's talk about commodities. Gold, down 1.83% in the last day. If I remember correctly, it was pretty bullish at the start of the week. And again, this is fairly similar than the XJO and the other indice that I can't remember which one was, the Dow Jones. If you look at the weekly gold, that's pretty bearish. There was a breakout, and they were talking about a breakout in gold, if I remember correctly, on one of the Oz Business Core episodes, either a week ago or just over a week ago. They were talking about a breakout in gold, and that has fallen flat. And there was a breakout on 16th of July, beautiful breakout, and it was a fairly short-lived breakout. This is sort of why sometimes you want to see a validation or confirmation of the breakout, because we have seen plenty of times in the past when gold looks like it's breaking out and then it falls flat on its face. And I still remember the last time it happened was the 4th of December 2023. It broke out in that one day and then pulled back. And they were talking about it breaking out on Oz Business Core for like a few weeks later. And I was like, no, it hasn't broken out. It looked like it was going to break out, but it hasn't. And finally, gold broke out in early March, and that was a beautiful breakout. So not a breakout yet for gold. In fact, yeah, it's pulled way back on Friday, down 1.83%. They were being really bullish on gold last week because of better than expected inflation numbers in America, a greater possibility of interest rates dropping, so a little bit more bullishness when it comes to gold. So I'm not sure why a gold has pulled back, but it has. Again, respects the market here. It has pulled back for a reason. But if I was in gold, I wouldn't be selling, rushing to sell, because it's still in a nice little uptrend. And who knows, it could break out next week. Iron ore, would we say, or should we say, iron ore is the most important commodity when it comes to Australia? I'd probably say yes. And when I look at the daily chart for iron ore, I go, nothing much here. There's no trend. If there is any trend, I'd say it's down, if anything. That's a daily chart. Weekly chart, sideways. It's just not doing anything. Really not doing anything. And you can tell it's just going sideways because you're getting these three crossovers of the moving averages. So you get 5 in a fairly short period of time. And that's just telling us that the market is going sideways. So no trend in iron ore right now. I wouldn't even be interested in any of the iron ore companies at this point in time, except maybe Fenix. Fenix is interesting. That's the only interesting one. And that has really been outperforming other iron ore companies. Let's compare 2 iron ore companies. So we have Fenix Resources. In fact, this chart looks brilliant. Beautiful looking chart for Fenix. And compare that to Mount Gibson. And I made the mistake of what's the word? I made the mistake of rotating from Fenix into Mount Gibson. And then I quickly sold out of Mount Gibson when I realized that mistake, but I didn't go back into Fenix when I should have. Completely different charts. So whenever I say typically a company will follow the underlying commodity they are mining, it's not always true. Just compare Fenix to Mount Gibson. So Fenix is doing really well. And as someone mentioned in the comment section of one of my videos, Fenix is not only an iron ore company, they've diversified into transport and warehousing, that sort of thing. I think that's one of the reasons why Fenix is doing really well. And Mount Gibson, in fact, looks really weak. They released their quarterly report. Ooh, look at Mount Gibson. No, I was going to include Mount Gibson in my company portion of the video because where the share price is right now for Mount Gibson is a really intriguing support level at about 30. That support level is around about 37 cents. It's at 38 cents right now. That's interesting for Mount Gibson. I'm going to put that onto one of my watch lists that I look at every single day because this is interesting for Mount Gibson. The other thing is, a lot of the other iron ore companies like Fortescue, BHP, Rio Tinto are down as well. I think BHP is getting interesting too. So maybe I'll just include BHP in the individual company portion of this video. Uranium 83.9. Nah, still in that between $80 and $90 range. It's sort of going sideways right now. A lot of weakness when it comes to uranium companies. I had a look at Boss Energy. It's broken down. I'm pretty sure it's broken down below a support level. Yeah, it's just broken down below a support level. So this is a support zone for Boss Energy. So it's looking a little bit weaker for Boss Energy, but we need confirmation of that. We need to set the share price for a little bit lower for me to think that Boss Energy is now in a downtrend. And a few other uranium companies are looking weak as well. I think it was Bannerman Energy. Yeah, starting to look weak. Paladin, maybe it was Paladin I was really thinking of. That's looking weak as well. So they're mostly all looking weak. Oil down below $80 a barrel. That's interesting. Pretty big down day on Friday, down 2.75%. And I don't think there's any trend here either. And we'll probably see a lack of trend when we look at the weekly chart. Yes, it's been going sideways. Not many signals, but you do see a fair few signals on the daily chart. And again, that's in fact 5 over this period. That is telling us there's no trend in oil right now. So probably the way to play oil is if it gets, say, below $70, that could be a buy. So that's the bottom of the range. Maybe the top of the range would be towards $90, something like that. Lithium, don't really care about lithium right now. It's still weak and there's no sign of strength yet in lithium. Copper, this is an interesting one. Copper, I did actually have a look at copper the other day. Copper had a really bad week. So copper down 7.8% for the week. And that was, a lot of that was in one day. In fact, the whole week was down. But actually, it wasn't on one day. I thought it was a little bit more down on Thursday, but down 2.93% on Thursday. Daily chart looks weak. This is weak. We're getting a lower low. We have a lower high. So this is starting to move into a downtrend. In fact, you could even maybe argue copper is now in a downtrend. Even the weekly chart, the weekly chart doesn't look as bad, but if you look at the longer term, nothing much happening with copper. But the daily chart looks pretty negative. I'm just going to have a look at the hourly chart. Very rarely look at hourly charts so the hourly chart, the hourly chart looks horrendous. Okay, coal, on the other hand, coal just going sideways. Coal just going sideways. Now let's have a look at a few other commodities that I don't have in that watch list. You have nickel. What's nickel doing? In fact, you have to look at the weekly chart for nickel. Let's have a look at the weekly chart. And it's down a lot over the last 2 months. Silver, more than likely, silver's down a fair bit. Yep, silver's down, but it's at a support level at around about $28.90 or $29. It hit this support level a few times in the past and it's bounced off it. So who knows? Silver's looking not quite as strong as it has been. We have natural gas. E-mini natural gas futures looks negative. What else do we have? Lithium, Palladium. How's Palladium going? Palladium still looks pretty negative. Tin has turned negative finally. I thought this was looking okay or even positive, but a bad week for tin. In fact, tin was down 5.9% last week. This green candlestick is for the new week. Yeah, it's got the 22nd of July, so it's a little bit ahead of itself. Or maybe that's Sunday. What's the first day on this? Yeah, this is tomorrow. So this is trading up until sometime tomorrow. And cocoa, why not have a look at cocoa? Cocoa that's a daily chart. Yeah, no interest in cocoa. Wouldn't even know how to trade it. Okay, so that's the commodities. Now let's have a look at bonds and Bitcoin. Yeah, let's do that. Bonds and Bitcoin. We'll start off with Bitcoin. And Bitcoin has gone a nice little rally. So I would imagine there would have been some sellers of Bitcoin below 58,000 because it broke below the highs or the lows we saw back in May. So there would have been a little bit of selling. We saw a little bit of pickup in volume, not a lot. And then as soon as that selling dried up, the price of Bitcoin has gone on a run. But it's still really trading in a channel, in a range. In fact, you probably could say the range is like that now. Sort of a zone in that area. So Bitcoin, I would become really bullish if it broke above 74,000. And I'd assume that Ethereum is similar than this. And let's have a look at bonds. So I'm assuming bonds went under a bit of a dip in last week. And it sort of did. On the Tuesday, it fell 1.95%. But we have seen a bit of a rally in bonds the last few days. So I'm not sure what's happening. We have seen gold push back. Bonds gone a bit of a ride. So maybe there is feelings that inflation will actually pick up in the current period. And so the possibilities of interest rate cuts in America in August or September may be less likely. I don't know. Or it could be just noise. Because when I look at the daily chart for bonds, these are 30-year government bonds, it's really not much happening. There's no real significant trend. Not like we saw back here, from start of 2022 through to the end of 2024. That was the definition of an uptrend. Not really seeing that right now. Okay, so let's get to the individual company portion of the video. So I've got about 9 companies to choose from. Not to choose from. 10 companies. And I was thinking also having a look at companies at a 6-month high on the ASX. Only 27 companies on Friday were at a 6-month high, which is understandable because it was a down day. I think it's like 130 companies at a 3-month high, 226 companies at a 1-month high, 114 companies at a 3-month high, and only 6 companies at a 6-month high, including one of the biggest companies on the ASX. But I'll get to that towards the end of the video. So let's go into a company called Imricor. Now, this company I did look at or feature in last week's video. And the only reason I wanted to look at Imricor again is because on Friday, the share price of this company rallied 5%, but the volume really intrigued me. Really big volume coming in. I don't know if the company released anything. Can't remember, to be honest with you. There is someone at work who always says, to be honest with you, and I never used to say it, and now I hear myself saying, to be honest with you all the time. It just shows you the influence of people around you. This is the buyers and sellers. Not much people wanting to sell. Any announcements from Imricor? What of the 19th? There was an announcement. Oh, they raised some money. It's not usual when you see the share price rally after a company raises money. I should have a closer look at this company. I have no idea what they do. Healthcare equipment and services. The reason why I'm interested is because the increase in volume the last month or two, and the share price is in a support or resistance zone right now. If the share price gets above 64 cents or even 65 cents, that would be a breakout. And I'm just hoping we see some more volume coming in. That could drive the breakout. You want to see a breakout on strength, high volume coming in, share price breaking out. That is a good one. So this could be an interesting company to have this in. Yes, I have this in my watch list. Okay, so let's have a look at a few companies that are really showing signs of strength. The first one is NRW Holdings. This is actually a nice looking chart. Share price has rallied in the last 2 days, particularly on Friday, on really good volume, particularly the Friday session. Now, NRW Holdings released a trading update, and I believe it was a profit upgrade on Thursday. Was it Thursday? Yeah, that's a Thursday. But there wasn't much reaction on the Thursday, which is interesting. The reaction came the next day, on the Friday. The higher volume came in, the share price increase, was it 5% on a pretty bad day, pretty down day. So that shows me there's relative strength in this company. And the chart itself looks okay as well. This, I'm calling it, is a breakout as well. Although the share price was already an uptrend. Now, I prefer breakouts when a company is going sideways or consolidating. And there is strength, greater strength in that. So this is a company whose share price is already an uptrend, and the share price on the back of a positive trading update has just reinforced that strength. So that's NWR Holdings. Chart looks pretty good. Chart looks pretty good. Another chart looks pretty good is CVL, which is Civmec. Share price going sideways. This is sort of my favorite play. When the share price is going sideways for a while, and then all of a sudden the share price just pops up on pretty good volume as well. Share price increased 11% on the Friday on increased volume. I don't remember if the company released anything. I have a feeling they might have. No, they didn't. So this is probably, it's really interesting. I do prefer this setup than NWR's, but I do prefer this setup on the back of a positive announcement, particularly a positive, like a announcement, financial announcement, like a profit upgrade or a trading update. So this is just, I wouldn't say it's noise, but I'm a little bit more wary of these sort of price and volume movements on the back of no announcements. But Civmec, don't know, I'm assuming they're in mining services or engineering services, something like that. I've never looked at this company before. Engages the provision of engineering services for the oil and gas industry. There we go. Civmec, definitely one to put on your watch list, I assume. Let's have a look at the weekly chart. In fact, the weekly chart looks really good. Oh, it's a beautiful weekly chart. All right, let's have a look at another company that is showing signs of breaking out, or has already broken out. Emeco Holdings. And this is one of my favorite types of charts. Share price in long-term downtrend. So it's been a downtrend for a few years, and then it's showing signs of turning around back in March and April. So we did have a breakout in late March, early April. Could have bought at a share price of 70 cents. So it's not much lower than it is now. And then we see the share price pulling back, and the share price has taken off. A subtle increase in volume, not a massive increase in volume, but a subtle increase in volume the last few weeks. And yeah, the share price when you look at the weekly chart, share price at a long-term high for Emeco Holdings. Not a company, again, that I have looked much into. It says it's finance, rental, and leasing. Provision of open-cut underground mining equipment rental. Okay, that makes sense. Leasing, yeah. Okay, now to one of the companies that is at a 6-month high. Pretty sure NWH is a 6-month high. Civic is a 6-month high, although that was 3 days ago. So that's the other thing. But CSL, CSL is at a 6-month high. Not only that, it could be at a 1-year high. Yes, I think it could be at a 1-year high. Just to confirm that. I do have a 1-year high. No, I don't. I thought I had a 1-year high. Screener. There is a new 52-week high screener that is in there, and if you look at by market cap, there's CSL. Yep, CSL is there. So is NRW Holdings. Anyway, that's not my screener. That's a screener that was sort of already there. Anyway, so let's have a look at CSL. 1-year high. If we have a look at the weekly chart, probably one reason to get a little bit nervous, it's moving towards the top of the trading range, which is above $310. So between about 310 and we'll say 340. It's been in the top of the trading, or in that trading range, about 4 or 5 times in the past 4 years. But I think eventually it's going to break out of that trading range, and we'll see the share price of CSL moving into an uptrend. Whether it's going to happen here, don't know. It could not. I do know a lot of fund managers do trade this, which is interesting. But share price going sideways for 4 years, and eventually it will break out. And again, I think I mentioned this before. We have seen periods of time when CSL share price just goes sideways for a period of time. We saw that between 2007 and 2012. Over a 5-year period, share price of CSL just went sideways, and then it broke out and went in an 8-year uptrend. Share price went from $40 to over $300 in 8 years. Could that happen again? Yes, it could. Not saying it will, it could. Somnomed. I still can't believe well over 10 years ago, I did research on Somnomed and Pro Medicus at the same time because both companies were valued the same. So I just equate both these companies identically because of that period when these companies had the same valuation, same markup. Somnomed has a markup now of about 50 million, 74 million. Pro Medicus has a markup of 10 billion. Just shows you research probably does matter as well. Pro Medicus has a markup of 13.7 billion. Jeez, just keeps going up. But back to Somnomed. Why have I included Somnomed? I'm trying to remember. Oh, yeah. I do remember. You have to look at the daily chart for this one. Share price in a downtrend. Huge downtrend. I don't think necessarily the downtrend has come to an end yet, but volume precedes price. Something I have read and heard a few times now. This could be another case where volume has preceded price. Massive volume coming in April into May. Huge volume coming in, and that signified the bottom, which sort of makes sense. So fund managers, retail investors see the share price of this company getting to 20 cents and they go, what value? I'm going to put all my money into Somnomed because I see great value in this company, hence the higher volume, hence a support level. And as the share price has moved into a subtle uptrend, well, not that subtle, because the share price has gone from 20 cents to 35 cents. So share price has increased almost, say, 80% or so. The volume has sort of remained not as high as we saw in April, but it has remained higher than what we saw back in 2022 to 2023, when there was no volume at all, which is why the share price was drifting lower. There was no interest in the market around this company until the share price got to 20 cents. So potentially 20 cents is a floor, and potentially this is a turnaround story. Not there quite yet with Somnomed. I need a bit more proof when it comes to this company because I don't think the company is profitable just yet. Yep, still lost me. Now, Magellan Financial Group maybe is a little bit different. Now, the reason I include this company is it just hit my crossover filter, hit that on the Thursday, but you can see it also had two other crossovers in the past 4 or 5 months, which is possibly an indication the share price is going sideways. When the share price of the company is going sideways, you're going to get a few false hits, a few crossovers with the moving average, because share price doesn't go straight in a consolidation period. Share price doesn't go sideways; it goes up and down in a range. So there is potential that's happening now with Magellan Financial Group. But if the share price gets above 10.50, that would be a breakout for this company. So it's still a little bit off that, but definitely one maybe to put on your watch list if that's your sort of thing. I did get a recommendation or a request to do Crowdstrike. I'll talk about that in a second. So next we have MFF, Monash IVF Group. This is a little bit different than Magellan. This had a crossover to the negative. So this was a request. Someone did ask me about this company a while back. Share price was in a beautiful uptrend from the start of February through to probably May 2024. So about over a year, the share price went from $1 to about $1.40. So a nice little 40% return in a short period of time. Pretty beautiful uptrend. But that trend showed some signs of stress when the share price fell below this purple box. And that was on the 4th of June. And share price has gone lower and has now, the moving averages has crossed over. So the 50 moving average has crossed below the 200 moving average, which is bearish. So Monash IVF Group does not look as bullish as it did during 2023 into start of 2024. And finally, BHP, before we get to Crowdstrike, BHP is in an interesting level. It's just near my purple box. I don't know why I have this purple box. Not sure why it's there. What I'm going to do is get rid of that purple box and just put a line. Just put a line right there. There it is. Sort of in that area. In fact, I could put a box sort of there covering the lows we have seen in BHP over the past 18 months. So in the past 18 months, whenever the share price of BHP gets below $42.50, is a time to buy. Is a time to buy because the share price usually rallies. Now, will it rally now? Share price has fallen well below that. In fact, the last time the share price was this low was back in November 2022, so almost 2 years ago. So is it a time to buy BHP right now? I'm not sure. It all depends again on iron ore prices. It's really interesting that when people talk about copper, they go, well, instead of these copper plays, why not just buy BHP? They're expanding into copper, and I just noticed in BHP's. Don't know if this is a new thing. I had a look at BHP's quarterly report, quarterly's activities report. In fact, I'm going to do it right now. I'm going to go back 1 year ago and see. Now I'll go back 2 years. Go back 1 year ago and have a look at their quarterly report. Because one thing I noticed with BHP is they put copper in front of iron ore, which I found really interesting. So in this little box here, copper was ahead or was higher than iron ore. And then when they go through their commentary, copper's mentioned first, not iron ore, which probably shows you that they're really focusing on copper. They're probably bullish on copper. Now, is this a new thing? And I'm going to test it out now. This is BHP's. No, they had copper first here. And let's go down. No, they had copper first. I want to go back further. How long ago did they change it? Because I doubt they had copper ahead of iron ore if we go back a few years. Let's actually go back a little bit further. Let's go back to 2022. Let's go to October 2022. I just want to see if they've always done this, or maybe it's just done alphabetical. Yeah, copper's first here. It could be just, no, it's not alphabetical because it goes copper, iron ore, metallurgical coal, energy coal, nickel. And they have copper first again. So maybe they've been bullish on copper for a long, long time. But anyway, found that interesting because it just shows you this is probably the first time I've looked at BHP's core report. The only reason I looked at it is because where the share price is. I went, oh, it's time to have a look at this company. That's BHP. Potentially buy situation for this biggest mining company in the world and Australia's second biggest company, just behind CBA. Now let's have a look at Crowdstrike. Someone did mention, who mentioned Crowdstrike? Anderson 6379. Please consider including Crowdstrike in your technicals update for tomorrow. If it's not too much work, would be a good one to discuss. And as an example, from a valuation perspective, still too rich for me. Understandably so. If I was really into deep value, which I do like deep value, I probably would not be looking at this company. But I'm conflicted because in addition to being a CPA chartered accountant, I'm a tech assurance person as well, been responsible for plenty of cybersecurity reviews. I'm extremely familiar with Crowdstrike, so also see the strength, understand the strength of the product and its best of breed position. So seeing it from a charts only view will be interesting as a learning opportunity. So let's have a look at the chart. Let's have a look at the weekly chart first. And yeah, so I don't think this company is profitable. So let's have a look at their earnings. Oh, they are profitable. So this is a week quarterly. If you look at the annual numbers, the revenue of this company has increased from $481 million in 2019 to $3 billion in 2023. So over a 5-year period, the revenue in this company has increased sixfold, more than sixfold. That's growth. Profits, they are profitable right now, but it's low profits, and they've just gone to profitability. If you look at the quarterly numbers, they've been profitable the last 4-5 quarters. So they've hit an inflection point. But if you look at the PE ratio, because they are profitable, you actually do get a PE ratio. PE ratio says 644.71. But there is potential that that profit could double, triple, quadruple over a 1-year period. Even if it quadruples, it's still PE ratio of 150. But the revenue growth is impressive. There's no doubt about that. So let's have a look at the chart. The weekly chart. This just follows the interest rates. So share price was weak during that period where, interest rates were rising. Share price recovered and moved into an uptrend, a really nice uptrend in June 2023. Company I wasn't really following that point. They did release a really good quarterly report. I do remember this. There was a lot of excitement in this company when they released their quarterly report. So 10th of June, I think that was it. Share price on that day rose 7%. And I was like, oh, I've probably missed the boat here. But then Share price collapsed on Friday because of that cybersecurity stuff around the world. And when this sort of thing happens, a lot of people see a perceived higher risk and they have to get out. In fact, some of the experts I heard said this was a problem for CrowdStrike. They're going to have to, this is going to cause the company some problems, that sort of thing. But I think this could also, on the other hand, be a short-term issue. And over the long term, it's just sort of like a little non-existent little problem, little bug that means absolutely nothing to the company in the long term. So the question I have is whether this is an overreaction from the market. I actually don't know at this point in time. So the other thing I want to look at is just a technical look. And there is this level right here is really important. So that's about $282. We'll say 280. In fact, what I'm going to do is just go ahead and put an area, do a rectangle right in that area there. The reason I put it there is we saw the share price for some reason on the 21st of February dip into that level and then pull out fairly quickly. And this is the whole reason I think the American market is fickle. You can just see the movement in the share price of this company. This is really wild movements. So on this day, the share price fell 10%, and then a few days later it was higher. And on the 6th of March, share price rose 10.7%, but in fact rose higher. The previous day, the share price had dropped 5%. We see wild swings in the share price. I just think the American market shows me time and time again, it's just really fickle. People have been complaining about the Australian markets, but I think Australian markets are really ordered compared to the American markets. And CrowdStrike is a perfect example of that. But when the share price gets into this purple box, in this calendar year, it has been a bit of support. And the share price is right on that. It just bounced off that level, that purple box, on Friday. So this could be a buying situation for CrowdStrike. And I would be surprised to see the share price go significantly higher from here as the market realized this was just a blip, a little blip. And it sort of potentially reminds me of Meta. So I did take a position in Meta on the 25th of April. They released their quarterly report. It was a little bit negative. Share price dropped 10%, and I bought on that day because I thought overreaction from the market. The share price took off. A little bit of pullback, but that's okay. That's a pullback with the general market. And again, fickleness of the market. The previous quarterly update, share price of Meta rose 20%. So it rose 20% on this quarterly update. That was in February. And in their April update, share price dropped 10.56%. Again, fickleness of the market, but over time, share price of Meta has been rising. So when it comes to CrowdStrike, probably the way I would play it, I wouldn't be adverse to trying to take a position on Monday session. And what I might do is put a buy at about 290. Hopefully, the share price can drip or drop to that point somewhere or sometime in trading. Might not. In fact, I'll probably say it won't. And if the share price drops below about 275, that would be bearish. So probably a low risk trade. Buy at 290, sell at 275 if the trade doesn't go your way. Anyway, that's all I've got for this video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.